Hey everyone, and welcome back to the Crypto Cortex. Today, we're diving deep into a topic that affects every single person holding or trading cryptocurrency. This isn't just another market update. This is a foundational shift we all need to understand. The Financial Stability Board, or FSB, which is the main financial watchdog for the G20 countries, the world's largest economies, has just sounded a major alarm. They've issued a stark warning that the global regulation of crypto is dangerously inconsistent and full of gaps. So, what exactly is the FSB saying? In their latest report, they've made it crystal clear. The way we regulate crypto assets and stablecoins is a patchwork mess. Different countries are doing different things, and many are not doing nearly enough. Think of it like this. You have a global financial system, but the rules are different from one street to the next. Some streets have strong fences and security, while others are wide open. This fragmentation is creating a massive problem. The FSB is particularly zeroing in on two specific areas: stablecoins and cross-border crypto service providers. These are the weakest links in the chain right now. Let's talk about stablecoins first. These are the assets designed to be the safe part of crypto, pegged to traditional currencies like the US dollar. They are the bedrock for a lot of trading and DeFi activity. But if the rules governing them are weak or non-existent in certain parts of the world, how stable are they really? We've seen stablecoins depeg before, and the fallout can be catastrophic. The FSB is worried that without consistent, strong oversight, a major stablecoin could collapse and send shockwaves through the entire financial system, not just crypto. Then there's the issue of cross-border crypto service providers. This means exchanges, wallet providers, and other platforms that operate globally. The FSB's concern is that these companies can essentially shop for the easiest regulations. They can set up their headquarters in a jurisdiction with very loose rules, while still offering their services to customers in countries with much stricter laws. This is what's known as regulatory arbitrage. It creates an unlevel playing field and exposes investors everywhere to risks they might not even be aware of. A company might look legitimate, but if it's based in a regulatory haven, your funds could be at significant risk with very little legal recourse if something goes wrong. So, why does this matter so much to you, the individual investor or trader? The FSB puts it plainly. When huge parts of the crypto market operate in these weakly regulated zones, it creates systemic risk. It's not just about one exchange getting hacked or one coin failing. It's about the potential for a domino effect. A sudden shock in one of these regulatory havens could trigger a global market crash, affecting everyone. Imagine a major, unregulated exchange suddenly freezing withdrawals or collapsing. The panic would spread instantly across the globe, and because of the interconnected nature of crypto, it would drag down prices everywhere. Your portfolio, no matter how carefully you've managed it, would be caught in the crossfire. This warning from the FSB isn't just background noise. It is a massive red flag being waved directly at the industry and at every single one of us participating in it. For a long time, many of us have viewed regulation as this distant, abstract concept that might happen someday. But this report changes everything. Regulatory risk is no longer a what-if scenario for the future. It's a clear and present danger. It's a frontline factor you absolutely must consider in your investment strategy, right alongside market volatility and project fundamentals. What does this mean for your actions moving forward? First, you need to be more diligent than ever about where you hold and trade your assets. Ask yourself, where is this exchange based? What regulatory body oversees it? Are they licensed and compliant in a reputable jurisdiction? Don't just go for the platform with the lowest fees or the most listed coins. Security and regulatory compliance are paramount now. Platforms that are transparent about their licensing and adhere to strict standards, like those in North America or the European Union, are generally a safer bet. Second, understand the jurisdictional risk of the assets you hold. If a project's foundation or core team is based in a country with a shaky or hostile regulatory environment, That adds a layer of risk. A sudden government crackdown could render the project's token worthless overnight, diversifying not just your assets, but also the jurisdictional risk associated with them is becoming increasingly important. This move by the FSB is also a signal that the era of the Wild West in crypto is officially coming to an end. Regulators are coordinating, and they're not going to tolerate these gaps for much longer. We can expect a wave of new, more stringent regulations to be proposed and implemented globally. This might feel like a bad thing for a market that thrives on freedom and decentralization, but in the long run, it's a necessary step for maturity and mainstream adoption. For crypto to ever become a truly global asset class that institutions and everyday people can trust, it needs a solid and consistent regulatory foundation. The takeaway from all of this is simple but crucial. Be aware, be critical, and be prepared. The crypto landscape is shifting under our feet. The decisions you make today about where you put your money and which platforms you trust will be more critical than ever. Regulatory risk has moved from the back of the bus to the driver's seat. Don't ignore it. Do your own research, stay informed, and make sure your investment strategy accounts for this new reality. That's all for today's deep dive. I know this is a heavy topic, but it's incredibly important. Let me know your thoughts in the comments below. How are you adjusting your strategy in light of these warnings? Thanks so much for watching. If you found this video helpful, please give it a thumbs up. And don't forget to subscribe and hit that notification bell so you don't miss our future updates. Stay safe and invest wisely.